Good morning, everyone. Good morning, all, and welcome to the second episode of our virtual PSOJ Roadmap to Jamaica 2.0 series. I'd like to acknowledge the leadership of the PSOJ and their varying committees. I'm Melanie Subratie, a member of the PSOJ Economic Policy Committee, Deputy Chair of Musson Jamaica, and First Vice President of the Jamaica Chamber of Commerce. And I will be moderating this conversation today. Starting with a little background, this conversation series is an initiative that seeks to engage local and international leaders on very important topics related to boosting private sector investment and driving economic growth in Jamaica, an important focus area for the PSOJ. We'd like to recognize and thank our title sponsor for the series, the JMMB Group, as well as the Inter-American Development Bank, both of whom are strong supporters of our efforts to help build a stronger private sector and economy. Now, this is a follow-up conversation to a session held in November last year, which some of you may remember, where we spoke to the principals of Digicel and cable and wireless communication to discuss Jamaica's digital infrastructure and the requirements for closing the digital divide locally. Today's session will focus on the demand side of that conversation, and we'll seek to answer some key questions. Firstly, what is currently available online and what needs to be available online? What drives demand in the commercial space and take-up in government and the private sector? Thirdly, what drives digitalization take-up in government and the private sector from the policy side? So we have created a very distinguished panel for today's conversation, and we're extremely pleased to have these special guests with us this morning. Firstly, Felipe Rincón, I hope I'm pronouncing everything right. He is Vice President of Public Policy of Mastercard for Latin America and the Caribbean. He is a lawyer and also has extensive experience in regulation and public policy in the financial and securities market. Dr. Javier Preciozzi, an international independent ICT consultant specializing in identity management systems of biometrics. He's also an adjunct professor with the Faculty of Engineering at the Universidad de la República in Uruguay. And Francesco de Simone is the IDB Senior Modernization of the State Specialist based in Kingston, Jamaica. Before joining the IDB Jamaica Country Office, he was technical advisor of the IDB's transparency operation. So it's a stellar panel, and what we've tried to do is make sure we have experts in varying areas to be able to guide our discussions. So we're going to have discussions for about an hour, after which we will open the floor and give our audience an opportunity to pose questions and get further perspectives. So starting with Francesco, can you give us some context as a basis for the discussion in terms of where you see demand for digital products in the government and private sector right now, and where we stand next to our peers as in small and developing economies? Thank you, Francesco.
Thank you, Melanie, and good morning to everybody. Can you hear me?
Yes, we can hear you.
Excellent. Let me share a presentation that I have prepared just to sort of set the tone and make a few points regarding the questions that you just shared. Just a second. Well, first of all, thanks everybody. Thanks for the presentation, and Melanie, and thanks for inviting me. Let me go quickly to the presentation. So I divided this in two areas, sort of addressing your questions, Melanie. The first on drivers, and the second to look at Jamaica next to its peers countries. It's a presentation that is relying mostly on data, so I hope colleagues find it interesting. Let me get started just to give an overview. So I try to be as schematic as possible here, and then a little bit based on the IDB experience in the region. What drives demand for the adoption of digital services up or down? Obviously, what we have seen in the last couple of years is the pandemic, the quarantines, the work from home requirements. It's been obviously a massive stimulus towards the adoption of digital services. I'll show some data. Fiscal pressures. Governments talk a lot about doing more with less. So that's definitely something that I will share some data on. And then bad experiences, bribery, corruption have also been shown to drive the adoption of digital services. This is an area that is very close to me because of my background. And then what drives demand down? I think we are seeing a lot of that, including in Jamaica, awareness of risk in the cyberspace, fear of cyber attacks, concerns regarding data protections. These are definitely issues that we see. And sort of lurking behind that, it's really lack of trust. And I will explain what I mean by that. This is trust in institutions, in interpersonal trust. And this is something that in Latin America and the Caribbean, unfortunately, is pretty widespread. And then there are some factors that sort of hold or slow down the adoption of services, connectivity, digital literacy, and financial inclusion, which Felipe will talk about, I'm sure. I'm not going to get into a lot of details on these, but just for colleagues to keep it on their mind. So let me talk quickly about the effect of the pandemic on the adoption of digital services. One of the interesting things interesting surveys we've done throughout the last year or so was a survey of 2,200 public officials in Latin American and Caribbean countries, showing that the lack of digital tools was a much bigger challenge to cope with the pandemic than budget constraints. I think this is a huge piece of information. What is telling us is that people and public officials in the region say our problem is not so much the lack of financial resources, which is commonly pointed to as the main impediment, but it's actually that we don't have the right digital tools. I think that is extremely telling. Let's go down to some specific data on the adoption of digital services in the region. In the months prior to the pandemic, only about 21% of survey respondents from 10 countries in Latin America and the Caribbean had done their last government transaction online. Now, during the pandemic, this proportion has gone up to almost 40%. I think it doesn't get clearer than that. The percentage just basically doubled just in a few months. Now, that's good news. The bad news is that our region, the Latin American Caribbean region, is still trailing very much behind the global leaders in this area. And Javier is going to be talking about Uruguay as one of the regional leaders, but there's others. We're still behind. Let's talk a little bit about the fiscal pressures. Our governments are facing serious shortages of resources. A lot of money has been put into managing the emergencies, and there's no money to do more programmatic work. Well, if you're looking for resources, look no farther than what the adoption of digital services can save you. This is a table that was prepared just a couple of years back as part of one of our studies that shows the cost of digital services versus in-person and over-the-phone public services. Again, extremely telling. For digital services, we're talking about fractions of a dollar per transaction. For in-person services, we're talking about several times multiples of that. What that tells you is that if a government is trying to save resources, this is obviously the way to go. Very important and very useful way to incentivize the adoption of services. It's not only that, obviously online procedures are also a lot faster. We estimate about 74% faster than their in-person equivalents. And the savings are not only related to that. There are applications related to data analytics, for example, in the tax sector, that are saving millions and millions of dollars to governments. Just one data point that I bumped into from one of our studies is that Denmark saved 60 million euros in welfare fraud just by adopting digital tools. Other driver, as I mentioned, corruption. This is my background. I work at Transparency International and done research in this area, so it's one of the areas that I know the best. What our studies show is that people who have been requested to pay a bribe, a small tip, whatever you want to call it, as a way to get a better or faster public service, are much more likely to use digital services the next time. I think it's a pretty powerful piece of information. Now, we look at the region, let's look specifically at the Caribbean, and we see that the percentages of people who have been asked to pay, let's call it a small bribe or oiling, greasing the mechanism, so to speak, it's not as high as in Latin America, but it's still pretty high. We're talking about between 1/4 and 1/5 of people who responded to our surveys that are reporting that in one of their most recent interaction in the last year before they got interviewed with the government, they were asked to pay something. It's still pretty significant. Again, it's not as bad as Latin America and the Caribbean, but still significant. And if I were one of those people, of course, that's a really good reason to next time avoid the in-person interaction and try to do it digitally. So these are drivers that, from where we stand, are really pushing in the direction of adoption of digital services. Now, let's see what is slowing us down. You think about Jamaica just the last couple of years. We had the Jam COVID website, which wasn't really a cyber attack, but more a case of information being available that should have been protected, that wasn't protected. You think about a couple of breaches of major companies, cyber attacks to major companies in the U.S. just recently to the grid, the hospitals, ransomware attacks. It's just very widespread, and I think the level of concern and awareness that people have about this is growing. So we did a study last year on these issues, and I bumped into this sentence that my colleague wrote. How do Latin Americans feel about the risk factors associated with untrustworthy behavior in digital services? And the word that he came up with was apprehensive. So you look at the table and you see that this is the proportion of population that we survey that felt that sharing their personal data entail more risks than benefits. We're talking about in digital services, digital interaction. And the number is pretty staggering. It goes from almost 90% in Ecuador to about 70% in El Salvador. These are percentages of people who said they don't really feel comfortable sharing their information online. If there's something that is going to slow down adoption, is certainly this, and we have seen it, I think, in Jamaica as well, fairly clearly. What I was saying earlier is that one big issue that we see in our region is lack of trust. If you look at global statistics, trust in the Latin American and Caribbean region is very low. Both interpersonal trust, how much do you trust your neighbor or a random person on the street, and how much you trust your government. Traditionally, these values have been very low. Why is that important? Because our research shows that there is a positive correlation between generalized trust, meaning trust in just any person that you bump into off the street, and digital development. So the more trust in society, the more likely you are to use digital services. And the same correlation we found with e-government development. So you know, this is bad news, unfortunately, in my view, because the way that you build up trust in society, interpersonal trust and trust in institutions is not very clear how you would go about that. And certainly these are processes that take long times, you know, and there are deep cultural factors at play here. You know, East Asia has really strong degrees of interpersonal trust. And I don't think it's a coincidence that in a lot of countries in East Asia, you have massive adoption of digital services. Just to close on trust, I wanted to share this, and then we'll move on to thinking a little bit about Jamaica. Data from 2017 from 18 countries in Latin America and the Caribbean show that people with high levels of trust, this means those who agreed with the statement, most people can be trusted, were 3.5% points more likely to conduct an e-commerce transaction than those who believe in the sentence, you can never be too careful when dealing with other people. Now, 3.5% may not seem like a lot, but this is data after having control for a number of variables, including education, age, gender. And the important thing to consider here is that the effect of trust on the uptake of e-commerce or digital services is the same statistic, is 61% greater than the effect of education level and nearly 4 times the effect of income. What does this mean? It means that your level of trust in institution or interpersonal trust is a bigger driver of your adoption of digital services than your income and then how educated you are. So it may be the single most important factor, in fact, in driving the adoption of digital services. Again, it's good to have this data. Not very clear, unfortunately, what we do about that. Let me go to Jamaica against its peers, Melanie, and then, you know, this, it should be fairly quick. You know, we could have gone through a number of there's a lot of statistics that we can use to compare Jamaica. We could have looked at connectivity. We could have looked at a number of other things. I decided to focus for this presentation and you know, just to make sure that I didn't exceed the time allocated to me, on a study that we did a couple of years ago called Wait No More, which is about the adoption of digital services in the Caribbean specifically, because I know that we're looking at our peer countries in the region. Now, let's look first at how Jamaica does in terms of its peers countries in Latin America and the Caribbean. This is an estimate of the number of hours needed to conduct a government transaction in the region. You see, Jamaica is a 4.1, is not nearly as bad as many other countries. You see, Bolivia is at 11, which is almost 3 times as much. Where are the other Caribbean countries? Well, Trinidad is right there, about the same level. I think Barbados and Bahamas are a little better. So what this presents is a picture that is not too bad. But unfortunately, I think the good news sort of ends here. You know, this is the same data, but for the Caribbean, Jamaica is at about the regional average, so not too bad. But it goes on. So now let's start looking at the number of government transactions that can be completed in only one interaction with the government. So you show up at the government office, in 2 hours, you get it done, you go back home, and that's it. No need to go back. Jamaica is at the lowest level in the region, according to our study. What that means is that only 11% of people who were interviewed reported that their latest transactions were done in one go. So that's bad news. Look at Uruguay, that Javier will talk about, is the best performer in the region. Now let's look at the opposite way. How many transactions need more than 3, I think, visits? Jamaica is the worst performer in the region. 45% of people interviewed reporting that they needed to go to a government office at least 3 times to get something done. I think people online would relate to this. I myself have had to go through that on some occasions. It's just part of life, but should not be like that. Doesn't need to be like that. Again, similar picture here. This is the use. Sorry, I can't see the top. Just give me a second. Yeah, the use of digital channels to carry out government transactions. How many people that we interviewed for the survey carried out their last transaction online? In Jamaica, it was only 4%. You know, it's a very low. It's a very low percentage. This was before the pandemic. The data is from 2019. It doesn't point to a great adoption of digital services in the country. This is another interesting one. How many transactions can be started and completed online in percentage? Jamaica is not that bad. We are at about 17% of transactions that can be started online. A much lower percentage can be completed. So that means you can start it online, but at some point you need to show up. Look at Uruguay, 100%. Even Mexico, which is a large country, and Brazil, these countries are really pushing, I think, the adoption. Jamaica is moving in that direction, but we're not quite there. Now, let me close with, I would say, perhaps good news is this. Jamaica can, when it dedicates attention and resources, really improve its performance in this area. And, I'm going to talk about a transaction that we have funded through one of our loan operation, the Public Sector Efficiency Program, and that was led by Company Office, PSOJ. And there was the electronic business registration form, which Melanie, I think people in the audience would be familiar with. It was a project led by PSOJ, funded by one of our projects, and it's now fully operational. So in Jamaica, you can now register a business entirely online, and this led to a staggering improvement in the ranking that Jamaica has in the ease of doing business indicators of the, I think it's the World Economic Forum that does this statistic. So in 2019, Jamaica was number 6 in the world for how easy it is to open a new business. Actually, I think now it went to number 5, if I'm not mistaken. And I know that the PSOJ and the government intend to try and make Jamaica number 1. I know that there are still some things that need to be sorted out, particularly with the process of picking a name for your company. Why I'm showing this is that, the message I want to close with is there is definitely hope, and like in everything else, I think when Jamaica dedicates itself to something and puts the attention and the resources, it can definitely succeed. So I think this is a really, really important signal that when a transaction is digitized, it can be done finally, it can be done to at the world-class level. The challenge is that this is one of probably thousands of government transactions that are currently that is digitized. The rest mostly is paper-based. And I think one big question, which perhaps we can talk about later, is how do we get there? How do we go about digitizing hundreds or thousands of government transactions? Because if you do it one by one, it's a long process. And that's it on my side, Melanie, and over to you. I hope I didn't exceed my time.
That's okay. thank you very much. That was really interesting. And, you know, definitely that point about trust being more important than education or income levels is quite incredible. I know we were going to talk a little bit about metrics, but I'll come back to that at the end. And I think we saw from all of the charts you put up there that Uruguay is top of the class, clearly, and has like a gold star on every single chart. So, you know, people tell you to go ask the people who are sitting at the top of the class how they got there. So that's what we want to do now. So I just wanted to ask Javier, so can you contextualize for us the speed and growth of the digital economy in Uruguay for our audience? And could you indicate what the benefits have been for your country, together with how your government was able to use policy tools in order to expedite that growth? And I'll give you about 10 minutes if that's possible, and then we'll go on after that.
Okay, Melanie. Yes, I will try. Thank you very much for the invitation to be in this work, in this forum. And I will, again, as Francesco, I will support my comments on a slide that I prepared for this specific purpose. So basically, let me know if you are seeing my screen.
Yep, we can see it.
Okay.
Yeah, thank you.
Okay, so basically, first of all, I will just give you an idea of Uruguay, because I think it's important to contextualize it and also to relate it with Jamaica. We have more or less the same population. We are nearly 3.5 million. The area is much bigger. It's like maybe 15 or 16 times bigger than Jamaica. We also have a GDP which is again bigger than Jamaica, without being, you know, a developed country. We are still an underdeveloped country, and we have one key factor, which is that we have nearly 3.5 cow per capita per habitant, which can give you an idea of how the country is distributed. Basically, it's an empty country with a lot of cows and very few people. The other thing that we also have is a lot of football players, not so much as cows. But anyway, we also export football players. So that is why we are known in general. Uruguay is also, as we saw in other presentation, is first in digital government, is first in the region in digital development. It's also part of the D7, this group of countries, you know, with Estonia, Israel, Canada, New Zealand, and the UK, Korea, that are most developed in terms of e-government. And just to give you some ideas of figures about Uruguay, we are basically in 10 years, the government did a very big project to move or to socialize digital services. Just to give you some examples, between 2006 and 2016, the internet access for the lowest incomes moved from 1% to 77%. 99% of the schools and hospitals have internet access connection. That is also a public politics. There was an increase in the services provided by the government, and as Francesco said, and this was even just to give you also the highlight of the relevance of this matter to Uruguay. One of the promises of the former president between 2015 2019, one of the promises was that the full number, all the transactions with the government will be able to start there online. So that was a campaign promise that was I will say I was part of the government at that time, and I know that was something that moved, to the lower levels of the administration, and to encourage all the ministers and all the government agencies to do and to move on that direction. And at the end of that period, 100% of the transactions with the government can start online. Now, there is one thing which is also, I will skip this one, but I want to focus on specifically on the economic and financial and the billing or economic component or the financial component of the digital economy. And even if Uruguay has a very good indicators in other digital components, it was very low in terms of digital of financial inclusion. For example, Uruguay has nearly a minimal of 20% of people with a bank account, when the average in Latin America was 35%. That was in 2014. So starting at that point, we were very low in the number of bank accounts. We were very low also in the number of electronic payments, percentage of electronic payments made, again compared with the region. Now, in 2014, the government issued it was approved what it was called the Financial Inclusion Law, which was a law from 2014 that basically creates has two basic components or objectives. The first one was to promote the universal access to financial services, and in particular to vulnerable and excluded sectors. So, and just to give you some examples of what that means, by law, salaries must be paid electronically. So all employees must have a bank account at no cost. So banks should give bank accounts at no cost to all employees, and five extractions and 8 transfer for free. So it's a kind of saying, okay, you have all employees have a bank account, and there is a number of transactions that you can do without paying that will enable you to do the basic transactions. Even small companies have the opportunity to open a bank account and with no cost and with very simple processes to open those accounts. And the second objective of this law was to promote, to transform and modernize the payment system. And in particular, this was done in several ways. One is, first of all, there was a promotion to distribute POS, point of service, yes, POS, all around the country, and to promote the use of electronic payments. And in particular, and this was very, I will say that this was one of the biggest reasons why the change in the behavior of the citizens was so clear. It was they give by this law, they create a discount in the VAT of 4 points if you use your debit card, and 2 points if you use your credit card. So each time you do the transaction, you receive 4 points of the VAT as a discount. And so doing that at the end of that was in 2014. At 2018, we have an increase of debit cards and other electronic payment mechanism, which covers nearly the entire population. The number of POS increased, like 6 or 7 times between this same period of time. And this graphic, I think, is very illustrative. I'm sorry, it is in Spanish, but I can explain it to you. Basically, the first line here, this is the number of operations in green, and the blue is the amount. And basically, you can see what happens in the first line here, which is the first year of application of the 4 points of discount on the VAT. And you can see the increase on that. And then there is also a reduction of 3. So at the second year, it was decided to move for 4 points to 3 points, but the graphic continues. And then you have here a decision of the government to again give that benefits and give again 4 points, and again the amount of transactions increase. And just to give you a glimpse of an example of this in practice, this is myself doing a transaction a couple of days ago with my bank account. I just go to the bank account, to my bank webpage to do a payment. And basically what you see here, which is the discount law 19210, and I can see basically the amount of money that is returned to my account because of the application of the law. So that is what I mean. One of the reasons why the country increased so much in the digital economy, it's clearly related to the law, because that law, which was a very big and complex one, include a lot of different fronts. One's related to the public, other related to the companies, other related to the banks. But overall, the law works well. I mean, at the end, right now we have nearly 20. I mean, if we compare the number of transactions done in 2014 to today, we have 27 more times of electronic transactions between basically in 5 or 6 years. And we have right now we have nearly 42% of all the payments being made by electronic mechanisms. So that is one component of the digital transformation in Uruguay. Another component is related more to the digital ID and the different components that creates the framework for digital signature. Basically, Uruguay has started with digital signature on 2009, 2011 by issuing approving the law which regulates digital signature, and that creates also the opportunity to add a second component of all this framework, which is the e-invoice. So basically, after approving that, electronic digital signature was the same as has the same formal the same formalization than a handwritten signature. So basically, all the invoice can be processed digitally, and that was another project of during those years, where all the companies should issue e-invoice, which basically creates the opportunity for the government to have a much more direct control and access to all that information. Because what you as a company have to do is to, when you issue an e-invoice, that is sent automatically to the tax administration. So basically, the tax administration knows, in real time what is happening with the taxes and with the transactions between the different nations. So yeah, so basically that is what I have to comment on what you say. I think that one very important comment from Francesco is and it's interesting to see that even in the Uruguayan case, there is still some difference, some gap between what the government and the ecosystem is providing for the citizens to use, and what is really being used at the end. So there is still some, there is, I will say, place to improve on that side, even in the case of Uruguay, because there are a number of obviously there are people who are not using digital transactions yet, and this is basically linked to the trust on the services, but also on the usability of some of the alternatives. And I also have the feeling that the pandemic creates increase even more all these figures that I present today. And yeah, so I think that is more or less that give you an idea of Uruguay journey on regards of digital transformation. Thank you.
Gosh, that was such a lot of information. I feel like I almost wish that I could have had an entire hour with more information and digging deeper. So I don't know if we can find another forum to do that, but it's really, really interesting information. And just to move on, our next panelist is in the thick of digital payments. So one of the questions I wanted to ask, on the basis of, the Uruguayan example that was using legislation to drive payments into the digital space. We all know that the pandemic itself has sped up the adoption of digital payments, not only globally, but in the Caribbean and Latin America and Jamaica specifically. So I wanted to ask Felipe what can be done from a policy perspective to continue this trajectory, and also just to flip in at the same time, sorry, what are the benefits to economic growth in terms of adoption of digital payments, and maybe to highlight some of the policy lessons from other jurisdictions. I know that's a lot to speak about in a short time, but
hello,
yeah.
Melanie. Thank you so much for this opportunity. It's been great, preparing this panel with you, the team, Javier, Francesco. Thank you to the PSOJ for having us. I think this is very interesting. It's such a privilege to be in the payment space with everything that's going on because of technology, right? We are a technology company. For many years, we were an association of banks. Back in 2006, we became a public company, publicly listed company, and we have been, having this privilege of pushing this digital transformation for payments, and quite frankly, the reality is that payments is in the middle of everything, right? When you look at the fintech charts that players like Finovista and others publish, you see, what everything that's going on with technology, whether it's in insurance, in investment, in credit, payments is in the middle. You need to facilitate payments. It's kind of the bloodstream for everything else to happen. So we are fortunate to be in the middle, and thank you so much for the invitation. And I wanted, sorry, but it's useful to have visual support. So I want to give a little bit of a context of the story that we wanted to tell you. Are you seeing here a presentation?
Yes, absolutely, we can see it.
Okay, Melanie. So we're talking about demand, right? And the one thing that I was thinking, gosh, how to have a conversation about demands in payment. And I think the first thing to understand and to have in consideration is this is a two-sided market, right? There's two kinds of consumers that we need to serve and to whom we need to present a solution. We have the payer, who's paying or who's originating a transaction, and the payee who's receiving the transaction. And the reality is, in both sides of the transactions, you might have, a consumer, an individual who just want to make a transfer to a family member in the country or out of the country. You have the government, you have a merchant, and you need to solve, trust issues, user experience issues, economic, value proposition for both sides of the equation. And the tricky part in payments, and the reason why this is so challenging but interesting, is you need to create an ecosystem, right? You need to create an ecosystem where you solve for, basically one of the big problems, financial inclusion. If people don't have access to an account, well, they cannot transact in the first place, right? If a merchant is not accepting electronic payments, cannot take payments in the first place. So there's an alphabet soup. I just want to give you the idea that there is an alphabet soup. Some of you have seen this soup: P2M, person to merchant, right? Shopping, people paying for in a restaurant or paying for an airline ticket. G2C, government to consumer or to citizen, right? Like benefits. In the pandemic, this has been really important, how to solve for merchants, for governments to deliver in a prompt, efficient way benefits to the population that has been more impacted. C2G, how consumers and citizens pay the government, whether it's taxes, whether it's public transportation, utilities. B2C, how business disperse, for example, the payroll, right? Well, one to many, one business to many individuals, employees, how can I pay distribute the payroll? And B2B, payment to suppliers, right? We published a paper on SMEs this last week, which is very interesting, and this is a very interesting piece of data. $155 trillion. $155 trillion is the size of these B2B flows in the world, versus, for example, P2M 55 trillion. So it's 3 times that. And most interesting than this, almost half of 155 trillion of that volume is done in traditional analog, paper-based payments, right? It's kind of crazy. And I was thinking, Francesco, the numbers of the cost, right? And the time, how many hours you take. When if you start to understand, how complicated, how complex, how time-consuming it is for SMEs, even for big companies, to pay their employees, to pay suppliers. So I just wanted to say that, this is the alphabet soup. I have a limited time, but do know that there's an alphabet soup, that there's many flows. And, actually, to have a deep dive conversation, you would need to go into each kind of payment. I wanted to highlight and to go to your question, Melanie, the characteristics of each payment, right? Because each payment solves for a problem of somebody that needs to pay and somebody that needs to receive a payment that is unique, right? It's very different, the problem that I have with a merchant, right? Than the problem that I have, to pay my taxes, or the problem that I have to pay my utility bills and so on. Is it a recurrent payment, or is it a one-time payment? Is it immediate, right? The other part needs to get the money today, now, in this minute, or can they wait a day? Is it there's an ability for the consumer and merchant to reverse their transaction, right? For example, I pay for a shirt and I want to return my shirt, and the merchant want to give me the money back. Is that easy to is that possible? And it's easy, it's efficient? Is it in person, or is it remote? I'm paying with money that I have, or is it a credit that I'm using? And the user experience. And I want to to answer your question. Let me see if I can use. I like to use the pointer here. The big change that we're seeing and the big acceleration with the pandemic is the in-person and remote category, right? We used to have ballpark 25% of payments worldwide were e-commerce. With this acceleration of COVID, the pandemic, people realize that they need to pay, in a remote way, right? They are they were locked down or still locked down. They need, to order for food, right, for medicines, and they need somebody to come to their door and bring, and they need and bring the medicines or the food or whatever, and they need to pay remotely. So Melanie, this is one of the big changes. What we've seen is basically an acceleration that we expected in 3 years' time. So the growth that we expected in 3 years' time happened in 1 year, around 10, 12% acceleration. And in terms of user experience, this is really interesting, right? It has to do with how easy it is to make a payment. Do I need to, how many clicks, do I need to open my mobile, authenticate with my face, or pull out a card? And the big thing here is contactless, right? So for years, the industry have been preparing for contactless, right? Basically, not inserting the card in a POS, but rather tapping into a machine. And this is very important. Some people say, well, that's not a big deal, right? Tapping or inserting, it's pretty much the same. The reality, it's a huge leapfrog for the industry, because the minute people start, tapping with a card, it's very easy to jump to start tapping with the mobile. And that's a game changer, right? All of a sudden you can start, you put together the technology. And again, this is an ecosystem game, and this is why this is challenging. Back, 15 years ago, when we started using, at a global level, chip and pin, right? One of the big challenges that we have is fraud, right? Because, we move money, right? The payment industry move money. And when something goes wrong, money is lost, right? So as we move money, what's the residual fraud? What's the fraud that we are not being able to prevent? And with pin and chip, meaning I have a chip in a card and I have a pin, the fraud was reduced, almost completely to very few basis points over a transaction for in-person transactions, right? But you needed to put, to have people a portfolio of cards with the chip, and the POS is ready to take the chip. So you need to solve an chicken and egg problem, right? The cards and the POS. It's the same in the card not present, how we call it, remote paying. You need the issuers of electronic payments to have the technology in there, right? Whether it's a bank or it's a fintech, and the merchant, right? And the acquirer, the institution that provides the service to the merchant, to have that in place too. So in terms of user experience, the big acceleration has been contactless. Of course, people don't want to touch anything. And now by that incredible growth in contactless, we're seeing a tremendous uptake in mobile payment. And this is a game changer. And the other slide that I wanted to show, I don't want to take a lot of time because I want to leave time to the discussion, which is the most interesting part, is we are in a multi-rail market now. So what I'm showing today is, we have two parties, wanting to transact, wanting to send money, and there are different rails and options and payment schemes, right? And cash is one, cash is one of the, people can choose cash, and they do choose cash. I don't have checks, but checks is another, another scheme that I don't have here, but as I told you, it's very relevant for B2B, and it's still out there. But now we have, central bank with their ACH, automatic clearinghouse, also bringing solutions. Private ACH, which has, buttons of payments through which people can, get into their home banking app and through web or through mobile and push a payment. We have the cards, the franchise, the interchange-based model, whether it's the 4-party model or a 3-party model, which is kind of the open system, right? The one that traditionally you associate with the name Mastercard. We have the super app model, right? The closed loops, right? All of a sudden, we are in the world of, you can do payments with a lot of apps, right? Whether it's a closed loop of a bank, of a traditional bank, or it's a closed loop of players like, a marketplace, right? Like eBay, Mercado Libre, all those guys, the Chinese, big players. You can increasingly pay with closed apps. And now, CBDC, central bank digital money, crypto, and, there's been a lot of talks because of the announcement of El Salvador. a week ago, all to say, there's a multi-rail market. And let me just give me 2 minutes to close here with this because I think this is very important. This is kind of sort of a deep dive of the previous slide. What I wanted to show here, and I think this is the message, is this is competition in steroid. What's going on in the payment markets? Everybody is competing, and what I wanted to show here, right in the middle, is to give you a little bit of a deep dive of how the card system works. Right, we have cards, but it's not only Mastercard. Right, there's other brands out there. Right, there's many players playing as card. There's many players that support the operation of issuers and acquirers, right? Issuers, the ones that issue electronic accounts. We have banks, traditional banks issuing payment means. We have non-bank institutions issuing, payment solutions like, the fintech players. We have acquiring processors. We have acquirers. In the left-hand side here, we have merchant banks, we have POS providers, we have gateways, we have merchant aggregators. This is a very, very complex and sophisticated ecosystem, and there's a ton of competition, what we call inter-competition, meaning competition amongst different rails, and this is good for consumers and for merchants and for governments, right? The reality is, as a result of this, merchants and businesses and governments will have the option to choose, right, amongst different rails. And the reality is that, this is a very dynamic industry. We have been seeing acquirers, right, for example, that are growing tremendously, right? When, I like to check the news just to every now and then in terms of the size of these companies, right? Nubank, which is probably the biggest non-traditional bank out there in the world, raised 1.15 billion, right, in a private equity round 2 weeks ago. That bring their value to 30 billion, right? Mercado Libre, right? It's a company that is valued at 80 billion, right? PagSeguro and Stone, the two big digital acquirers in Brazil, are 15 billions each. These are big players in this ecosystem. And the reality is, many of them are bringing services that are way beyond payments. So when you look into the acquiring world, right, these guys are bringing not only basic payment solution, but they're bringing loyalty solutions, right? It's amazing, right? You can go to a small store, and the small restaurant, not a chain restaurant, they can offer you a loyalty solution, right, and give you points every time you buy your meal there. This is a big equalizer for small merchants. This is the trend that we're seeing, and I think that we need to acknowledge this. We need to leverage this market reality, and this is going to be increasingly important for merchants, consumers, and cardholders. Let me. I don't know if I should leave this for the questions, but let me just say that in terms of the economic benefits of electronic payments, we have done a ton of studies in terms of how we can put their public policies that are, you see a lot of flags here, and happy to deep dive in this later in the question sections. But there's a lot of policy moves, right, that are pro-electronic, that are trying to disincentive the use of cash, right? Some of them could be obligations, as you see in this chart. Some of they could be disincentives. I have a lot of Uruguayan flags here, Javier. You're a very, very good example for the region and for the world, and happy to see the flags here. And I think this is very, very interesting, very relevant, and a lot of what we do is try to measure, right, how this impacts economic growth, how this impact the decrease of shadow economy. So I wanted to show you. I don't know if this, I want to show off this just to show you, Melanie, and the audience, the kind of things that we do. For example, all these policies, we have a tool that we have in house, and I can say, which policy do I want to implement? This is a simulator. This is real time, right? This is a tool that we have. Let's say we want to this particular obligation to make electronic payments and and social security benefits, right? And I can click here. I can use, another one. I can click here, tax incentive for merchants. Let me use just the first one, right? To show you. I want to show off a little bit with that because we do a ton of research on this and we invest a lot in trying to understand and measure this. And this shows, for example, that this public policy in particular, obligation to make electronic payments of wages and salaries, can impact, right, in these percentages, the decrease in shadow economy, the increase of government revenue, this percentage, the decrease in corruption, the increase in human development. So, happy to, let me go here. So we do a ton of research on this matter. And we believe that, in terms of public policy, it's hard, let me finalize with this comment. It's hard to think in a sector that will be more impactful for the growth of the economy, for the competitiveness of the ecosystem, of the industry, of the destination, in the case of Jamaica as a destination, than promoting competition so that, the magic of technology brings a value proposition that tackles the payment problem for both sides of the market. Let me stop with that because I can talk forever.
No, you just completely blew my mind, because what you're saying is you have a specific software model at Mastercard,
yeah,
where you have all the data for Jamaica or for each specific market. You can then put in each of these policy factors, and then you spit out what the impact is, just like that. Am I correct?
Yes, that's correct. That's correct, Melanie.
I don't even know what to say.
We do that. We do that with public information and also with some transactional data.
So how do you get to use that system? I'm just interested, and I know you have two further slides where you did run two options for Jamaica. So would you like to just share those?
Yeah, let me show.
They're super instructive.
We also have been investing in third parties. In this case, we did a work with a firm called InnoValue. Professor Schneider of the University of Austria, who is one of the authorities in measuring shadow economy and the cost of cash. And these two slides show, based, Javier, on the work that we've seen in South Korea and Uruguay in terms of incentives, how much, if you, and this is data for Jamaica, it's a little bit dated, but we did this some years ago. If you invest as a country on, and this is in particular a deduction on VAT. So if you say you are a consumer, right? You are a consumer and you have the option to use a bill, right, cash, or an electronic payment, whether it's cards or is it an ACH. And I tell you, listen, if you're paying with an electronic, I'm going to give you back exactly what Javier shown, and I love the fact that you shown that, your personal experience, Javier. I'm going to give you back some money. It's pure behavioral economics, right? So, for consumers, it's the same for me. I'm getting something back just if I use, right, an electronic payment means. So what this shows is initially you need to invest, as a tax collector, you need to invest because you're going to be taking less tax collection. So in the next, months, years or so, you're going to invest in the short term, but in the long run, you're going to be collecting way more. Why? Because you will be pushing for the formalization and you're going to be seeing more transactions, and we're going to be able to better enforce, tax collection. And in the long run, you're going to be able to increase your tax base. And when you increase your tax base, this is not something that they say, but this is my personal opinion. If more people are paying, then you can afterwards have a tax rate that is more competitive, that makes your economy more competitive. So that's the story behind this. This is a this is the calculation here. So what this shows us is that, in terms of tax collection, we can grow in a positive scenario, 25%. We can increase because as a result of a policy like this one. In a middle, not optimistic, not pessimistic scenario, it should be around 14%, something like this. So this is the kind of conversations that we want to open, and I think that the time is right because consumers now will be having some much more options to choose electronic. That this just makes sense. And the other one is this one, right? The other thing is how much the GDP will grow. And in our calculations for Jamaica, this is the numbers that we run. If you start growing the usage of electronic payments in 30%, you will see in the case of Jamaica growth of almost 1% of GDP after a couple of years. So I think Melanie, I think the message that I want to give here is these are methodologies, these are econometrics, these are models that are based on assumptions, variables. You can agree, disagree, you can want to deep dive, but I think the reality is the direction towards this is pointing at. I think give or take, the reality is that we need to better understand how promoting electronic payments, how promoting digitalization will increase the efficiency of the economy overall, will increase the efficiency of how the government works, right? That blew my mind, that those numbers, Francesco, on the number of hours, right, that people need to invest in doing something with the government. How much the GDP for a country, how more competitive is the country going to be over the course of time. So yeah, this thank you, Melanie, for helping me and giving me extra minutes to show these two additional slides.
It was absolutely fascinating and really, really interesting. And I have some other extra questions, but some of them got answered. So I was just going to flip over to some of the questions.
There was changes of government, but of the same party, I will say. Right now we have a change in that. So there is a new party at government. And I will say there were some changes in the laws. For example, today it's not mandatory anymore for an employer to pay to an employee, but only with a bank account, with a transfer. Right, and now today we are enabling the employee to decide if they want to receive the money cash or in the bank account. So there are a few changes. More related to the freedom of the person, but overall, I will say that AGESIC, which is the agency in charge, as Francesco mentioned, in charge of orchestrating all this, it's a very well and established organization in Uruguay, which has the trust of all the governments. So they are still running the digital transformation projects, and I believe they are well. We have a very complicated, as everybody, with the COVID, but there are other initiatives that were able to use a lot of the digital infrastructure that were in place. For example, to do benefits, for the people that needs more. So there were a mechanism to do that. And just to give you an example, if you have your mobile ID, if you have your ID and your app, you will receive the benefits as money in your bank account. But if you don't have that, or you don't want to have that, you can take the benefits from goods benefit. You can go to a place and obtain the basic stuff that they deliver. But if you want to receive money, the only way to do that is by a bank account. So there are, I think those are examples of how having a digital ID is also present a lot of benefits for the country and the formalization of all the transactions.
I think that adds answers another question that is in there from, I think it's Mr. Franklin, and I'm just going to ask it. And I'm going to ask Felipe, is there, he says, how do we distribute electronic payment cards or alternative digital payment solutions to the mass of the population so that they can access digital services? But what I found what was interesting about his next question was, he was saying, can the NIDS registration process, so NIDS in Jamaica is our national ID process, be used simultaneously as an opportunity to distribute mass payment solutions? So I guess the question I'm going to interpret to ask you is, are there any countries in Latin America and Caribbean that you can give it as an example that have used the national ID initiative to also work in this sort of increase in payments that obviously
Sorry, Melanie, once Felipe is done, I think I can also speak to this as, I have some information on that we could share. Okay.
Thank you. Felipe, is there?
Yeah. Melanie, I would say that, I mentioned, a remote payment, card not present. And ultimately, the challenge of paying not in person is a challenge of electronically demonstrating that, whoever is behind the line is the real person, that there's no one impersonating. So the challenges of payments today, it's a challenge of digital identity. Right? And the reality is, today we like to believe that the way to solve this is through technology. Right? And technology today can help us, through, I can throw fancy words like artificial intelligence, machine learning. But the reality is, when you have an ecosystem then that can move data from one side to another, like, for example, not only the basic biometrics, like your fingertips, but even behavioral biometrics, how you walk, how you type, right? And there are robust ecosystems competing for that. That's going to ultimately allow individuals to authenticate themselves for every kind of service, interaction with the government, and so on. So it's a matter that where Mastercard, a field where Mastercard is working. In particular, in Costa Rica, there is an initiative with a partner where there's going to be a solution for digital identity through the electronic payment structure. The reality is that banks traditionally are the ones that have been investing considerably in technologies to make sure that the one in the other side of the line is the one that he or she says she is. So this is increasingly relevant. I think this is something that is taking steam in the region, but we are working with governments, and we will be happy to follow up this conversation.
Thank you.
Melanie, just to add, thanks for the opportunity. I agree with what Felipe said. A couple of reflections. First, there are countries in which national identity and sort of payment cards have been sort of fused together. The example of Nigeria is a remarkable one. In my view, it's not a best practice, but it's definitely something that has been happening. Now let's look for a second at Jamaica. One of the things, well, full disclosure here, I'm the officer of the IDB that is responsible for the oversight of the National Identity System project, which, as you know, we're funding. So that's where I'm coming from, and I'm a huge supporter of the project, of course. In Jamaica, the government is looking at giving people the opportunity to sign up for the opening of a bank account at the same time as they are registering under the National Identity System. I say looking at the option because, of course, the bill has not been approved and is still being discussed, so we don't know what the outcome of that will be. But here's an important point, and Felipe, I think, can validate that. One of the main issues why there are delays in many countries in the financial inclusion and opening of bank accounts for everybody, is how difficult it is to do the customer due diligence, to really identify your clients. That is definitely the case in Jamaica. When I arrived in Jamaica 3 years ago, I really struggled to open a bank account. It took me almost 2 years. I thought it would be easy for me to demonstrate who I am. It turns out that because the way the regulations are written on anti-money laundering in Jamaica, in the Jamaica system, that it is extremely difficult. You had to get somebody to basically endorse and saying, yes, I know this is Francesco, I know who it is, you need the justice of the peace to chip in, all sorts of documents that in many countries are not necessary. Now, the national ID, biometric national ID, sort of closes that gap and gives everybody the opportunity with just one document to prove beyond any doubt who you are. So there's a really tight connection between those two things, and it's something that the government is looking at.
Yeah. Clearly, some of the legislation that has been in process for a while, the national ID, NIDS, for example, e-signature, data protection, are all items that need to be completed with their own regulation by this government. And I think that that's something that definitely needs to be sped up in order to facilitate everyone. Just to conclude though, we went over a couple of policy recommendations, and I just want to take 4 minutes of everyone's time. But if you could give if I could just ask Javier and Felipe, if there were three top policy, recommendations that you could give, for a country to adopt over the next 5 years, what would they be? I mean, what are the top 3 policy recommendations that you see driving demand in this space? Javier, would you like to go first? And then Felipe.
Okay, sorry. Yes. Okay. First of all, I want just to, because I saw some of the question and comments in the chat, and I want to make a comment on clearly Uruguayan journey on digital transformation. It was a long one. It took, or it's been taking 15 years or more. So it is not something that can be created, from scratch or it's being created from scratch on a couple of years. It's a very big one. I will say that one of the biggest components is to have a plan and to have a plan for a lot of years, like a plan for 10 years, 15 years, 20 years. And a plan, not a plan just for say, we have an agenda and this is what we want, and not doing anything or doing little on regards of that. So an agenda is for something, and you basically have to plan all the activities related to the government with that agenda in mind. So for me, planning is one of the bases. The second one is clearly political will. I mean, I was part of the government, as not part of the political party. I was part of the technical team at the government, and I received, the clear directions on where we wanted to go in regards of digital identity. I was CTO of the identity management system in Uruguay, the identity agency that issues the identity card, and we had very clear indications on how to proceed to achieve what the government defines that is important to achieve. So that is also very, very important, political will. And finally, the legal framework. So for me, each one of these steps were, supported by a strong legal framework. I didn't have the time to mention about data protection laws, all the identity laws, digital identity laws that were issued during this process. But clearly, that is also part of one of the third recommendation that I will mention.
Okay, excellent. Thank you very much, Felipe, I know you have a lot of countries that you cover, and you know,
Yeah.
that's a really large question, but you know, just so that, you know, to close, you know,
To close, I would say three things, Melanie. Thank you. One, innovation through competition. Innovation through competition. Try to, you know, create the framework where people can innovate, and new models, new business model, new technologies can be used. What the BOJ is doing with the sandbox is a perfect example. That's great. So one, innovation through competition. Two, this is payments. This is the savings of people. This is the financial sector. We need to be cautious. Orderly transition, right? We need to pivot to new technologies, new business models, but we need to make sure that any change that will be happening is orderly, it's planned, and level playing, and in that same category, level playing field, right? Because know your customer, right? Yeah, you know, typically people complain that banks take 2-3, Francesco was saying, you know, days to open an account because of the know your customer. That's because of regulation. So level playing field of traditional players with any one that will come to offer, right, and compete in the same field. And number three, I would say, in the digital world, nobody should be left behind. And that means tackle the issue of informality, right? Tackle the issue of people that are not formal because of tax hurdles or because of labor regulation. We need to tackle the issue of formality, and we need to tackle this for once, solving the root causes of informality.
I just wanted to say a huge thank you to Francesco, Felipe, Javier, to the IDB, to GMMB, and to the PSOJ Economic Policy Committee. There was so much here that I definitely learned from, you know, trust issues, the importance of the financial sector, you know, the ecosystem, behavior, you know, the market itself, taxation, effects on GDP growth. And I just hope that we can follow up the conversation with some rigorous sort of debate with the government in order to follow up. So thank you very much, everyone, for joining us. And thank you very, very much. Thank you.